Hello and welcome to another question and answer video. Now I got this question about a month ago, but seeing that I was making videos and then I didn't make a video for this one, and then I remembered actually I needed to do a video for the longer swing days, and then I remembered somebody had made a comment about it, so I thought, hey, why not we just do it? Okay, so let's get to see that comment here. Now that video is on this one, timing swing days and hours with pricing in advance, get ready to be amazed, innovation for traders, blah blah blah. And then I had a comment here from WildJag4Free. It says he says, or she says, sorry, but your BTC prediction didn't seem correct. So I did make a reply to that. You can read all the reply here, because I think he said afterwards that the day you pointed out are not significant in terms of a reversal. Okay, now remember, when we're doing swing days here, we're doing it for that specific week, because we're not staying in the trade for more than a few days, or we're getting in and out on the day, depending whether you're a day trader or a few days sticking in there, hanging in there kind of a trader. So the swing days on the members area, like here, let's go in there and check it out. So for example, I brought up Bitcoin there because he was asking about Bitcoin, so I'm going to check that out. For example, Tuesday and Thursday or Friday. So when I got a slash there, it's Thursday or Friday. And then Tuesday we're expecting a swing. So if the price is high, we want to sell somewhere. If the price is low, we want to buy somewhere. That's what swing day is, but it is for this week, right? So it is for the week of 20 to 24 Jan. So it's not a significant swing. He's right. It's not a significant swing, but the swing days are not meant to be significant. But can we use these swing days for significant swings? Yes, we can. And this is what the video is about. So if I go back, let's take a look. First of all, 20 to 24th of Jan. Why did I pick these dates? I'll explain in a minute. And then we've got Tuesday, Thursday, and Friday. And obviously we've got hours for every day in advance. That's Tuesday, and that's your Thursday, and that's your Friday. All hours, as you know, are given in advance. So what? Now remember, let me turn on the platform here, and then let's get my head out of the way. What we're doing here at the Global Trader Club is we're using technical analysis to figure out major levels when we're trading. If on a bigger time frame you got major levels and your swing days around there, then that's going to be a relevant, a significant kind of a swing area, isn't it? And this is why where you can also see me when when I'm sometimes drawing those support zones, resistance zones, demand, supply, whatever, on the bigger time frame, and I say, look, if we get into this zone, then here, we could expect something significant. Why? Because on a bigger time frame and a swing day on a bigger time frame, plus we've got the swing hours of the day with pricing, I can look for something significant that can take me up from one swing day to the other, or if the market's still up there, I should still be looking to sell if it's high, and if it's low, I should be looking to go long. So why did I pick this zone? Well, we can pick any zone, and I'll do a few examples as well. The reason is, first of all, if I tighten this up a little bit, this is where the market came up into, and then they sold heavy. So if they push it back up into a place where they sold heavy and broke a swing and closed under it, what I'd naturally like to do is take another shot at selling it, because that's where they sold heavy before. So then I'm thinking to myself, okay, that's a nice zone, but do I want to just sell any day? No, I want to match it to a swing day, and in the swing days, I want to match it to a swing hour, and then hopefully I'll get a price, and that should all be honky-dory. Now that is what these days are here, as you can see. So we had Tuesday, Thursday or Friday. Okay, so you can see here, that's the 21st of January. It's a Tuesday, and this is for the week of 20th to the 24th. So we had a Tuesday, Thursday or a Friday. So that's your Tuesday there. It's a swing day. Now you can see here I'm just going to get rid of this white line here. Now you can see here that was inside our box here, because remember I said this is a sell zone, so we shouldn't be buying. Also, if you watch those videos from those days, you can also hear me say, guys, these are like all-time highs. Do not buy the highs, okay, because we like to sell the highs and buy the lows. So these are the swing days, and this is, as you can see, where the market started selling off, and then those were the days where the market just really turned around. And you can see the market did not make any higher highs on the other swing days that I posted before. And because for the days after, and because this was a major level, the swing days turned into relevant or significant swing days, and that's how they went down, as you can see. Now the same thing can be for any technical analysis level. So for example, we have a significant level here. For us, this is like a significant level. I'm still thinking the market will probably come down here. We'll see how that goes. But that was a weekly significant level. If I go to the weekly, right, remember we said that's a goodbye kiss zone. So on a swing day, which was, I think it was on a Wednesday, I said we could go long with it. Okay, let me just sort this out. Now, if you look at last week's swing days, we had Tuesday or Wednesday. Look what happens on a Wednesday. Market comes down, double bottom, okay? And we had trading hours. I think in the New York session, it was right here about 3 to 3:15 or 3 to 10 past 3 or something like that. Anyway, so it was around here we had a swing hour. So that's your swing day, making a double bottom, market going up, breaking the zone, pulling back. If you've learnt from me, you would have measured the move if you're trading it. Okay, that's your move. And if you take it from there, that's a 37.5 low to the top, 37.5, and it's a trading hour. Okay, so that all comes together. You see what I mean? And then because that's a nice low, and on the weekly they've done a goodbye kiss, because the weekly chart is strong, then what we're going to do is just, okay, we're just going to go with it. Now then, if you also from last week, you understand that the next swing day was Sunday, wasn't it? If you take a look on that as well, what was it? Last week was 7 to 11 April. So from Sunday, there you go, Tuesday, Wednesday, and then the next swing day was Sunday. So from Tuesday, Wednesday, we're thinking like, well, if the next one is Sunday, so you got pretty much there 5 days, haven't you? 4 or 5 days going into Sunday. So that's your Wednesday. So that's day one. Day two, making a retracement. Again, beautiful. Going into day three, day four, comes into Sunday, and then the market sizzles down. Okay, so pretty much Wednesday to Sunday, that was like all the way up. You could have got in at, on the pullbacks to follow it into Sunday. So you can see from one swing day to the other swing day is like a significant move. Well, it is for me anyway. In any case though, let's say you're doing your technical analysis and you marked in your levels on anything on the weekly, okay, on the weekly or on the daily, then all you have to do is just choose those swing days. I can also show you others as well. Let's take a look at the euro dollar, because on the euro dollar, remember, like months ago, we knew the low and we said, you know what, this is the price we need to get in at. So then all I have to look out for really is the swing day, swing hour, because the price is what we're looking at, which was on the monthly. Remember, we had the monthly pullback expectation, and we said if it comes into there, which was 37.5 on the monthly, we are going to go, and that is on the monthly. So being on a monthly chart, and then you're getting your swing days, you're thinking, okay, so this is significant, because on a bigger time frame we're bouncing off. So on the monthly, let's go into the monthly. That was it, 37.5, remember? And that is the month of January. Okay, so on January, let's take a look at the weekly to check what week it was. January, the 12th of January. So let me look up the week of 12th of January, so we'll go into January. Okay, also if you're like, where's 12th of January? So let's go into December. 12th of January is going to be 10, 11, 12 there. Okay, so the week of it should be the 13th of January. And on the weekly, that is it, 12 January 2025. So either I've made a date error there. So let me take this into the daily. Let's go into the daily. That was the low. So that's the 13th of January. And the 13th of January, let me just check the date. Okay, so 13th of January is a Monday. All right, so I don't know why the platform's got 12 on the weekly. Okay, so that's a Monday. Monday to Friday. So I'm looking at gold. I've got Tuesday or Wednesday and Friday. So remember, we're biased to the upside. Want to buy on those days, right? Tuesday, Wednesday, Friday. So Tuesday is going to be the 14th and Wednesday is going to be the 15th. So 14th or the 15th, if we're at the lows, the bias is to the upside, because on the monthly, we are at 37.5, so it is significant. So that's the 13th and that's the 14th right there. Okay, and if I make this a little bigger, okay, now you can see that is significant because you matched it to a bigger time frame and a good price, and the market goes up, you can see there. Okay, and then we had, that's the 14th, so 13th is a Monday, 14th the market goes up, Tuesday, Wednesday is there. So the market goes up on the Tuesday after the bounce on Monday. We make a high on a Wednesday. Market comes back into Friday. So Friday is also a swing day. Okay. So what do we have here? We have the market going up on Tuesday, coming back on Wednesday. And this is also from the highs, a sell-off here into Friday. So from there to there, basically, we've had an up move. Then let's check out the next day. So this is 13th to the 17th. So we're going to then look at the 20th, aren't we? So then this is how we're going to just follow it through. Let's take a look at 20th of Jan is there. Let's see what happened on the euro dollar then. We've got a Monday and Thursday or Friday. So Monday is going to be the 20th. And that's, I think it's going to be your 20th. All right, so that's your 20th Monday. Boom, going up. Remember, our bias from the monthly is like to the upside. So we want to be pushing up. So that's your Monday. And then the market goes into Tuesday, Wednesday, Thursday, Friday. Because remember, I said Thursday or Friday. Now, Friday makes a high. Okay, so that is no longer relevant for us because Friday is kind of pushed up, but you can see we're going up into places. And as we do all of that on the daily, we're always going to be measuring targets and stuff. We're not just blindly going with the days. Okay, and also if we go back into those dates, then what we have is obviously the hours, right? So at what time we should get in and so on during the day. So a significant swing can be calculated like that. Same with anything. If you're doing a technical analysis, let me just open up any chart. Let's do something I don't do. Aussie dollar, for example. Let's open this up and then let me just put anything here, template it to, or I'm just going to do the daily here. All right, so let's just do a daily. Right. So if I was to, for example, look at the Aussie dollar and I'd say to myself, well, where is a significant level? Well, obviously a significant level is going to be this zone, isn't it? This is where the market sold heavy, and is there a slight gap? Well, not a lot. There's a bit of a gap from there to there, okay, which the market has done. So this zone can be significant. Now, If I was trading the Australian dollar, I'd be looking for a significant reversal from here. That's what I would be doing. So the first thing I would do, check out the Australian dollar according to, the regular swing day calculations that I do. And then, say to myself, okay, so let's say for the benefit of the argument, to make an example, let's say today is the 14th. And if I said to myself, okay, today is going to be a swing day for the Aussie dollar. Great. So now I've got to check the hours and the pricing. So if I wanted to do this for the Aussie dollar, for example, I'd say to myself, okay, I don't mind selling at the LCL1 06352 or at 76 PST level, which is 06358. So I've got 06358, 06352. That would be okay to sell at a trading hour, okay? And that would match my swing day to a swing hour with a PST price. Obviously, I'd check the weekly, the monthly as well, but just for the benefit of the argument, I'm just doing it for any asset. You could do the same for gold. If you're following gold, then you'll know where the main levels are. For example, this is a major level, okay? And also with gold last week, I said we still might pop back down here, but this was also a level, as you can see, where the market did a good buy kiss. It's what we call a good buy kiss anyway. Market comes back, breaks out, comes to the same breakout level, and look, Tuesday was a swing day, so that's significant, going all the way into the next swing day, which was, I think, Friday. So we just basically went up Tuesday and Thursday, or Tuesday and Friday it was. So that's basically it. And today is also a swing day for gold. Now, if I know today's a swing day for gold, okay, obviously at the highs, I don't want to be a buyer. All right, so I'll just say to myself, okay, where can I sell? And I can look at my PST prices daily, on the weekly, and then say, okay, you know what? If we reach those prices on a swing day, I might do that. Why? Because I don't want to be just selling anywhere at any time or any, at any event. Okay, so if I, for example, this is gold, right? So if it comes up there into trading hours, I don't mind selling. This was the high of Friday. As you can see, the market's already had a few trading hours here, but these are going to be important. That's the New York session today. All right, so for significant swings, if you're going to use the daily swing days that I've got here, you got to match it to significant levels, and then it'll work fine. Okay, with the hours as well, then your bias is going to be really, really strong. There is an additional way to do it as well. Sometimes clients ask for swing days that are like for other assets, right? For example, I'm just doing gold, euro dollar, SP 500, Dow Jones, Nasdaq, and Bitcoin. So these are the only things I've got here. But if you think about it, if anybody's asking for somebody else, I also do custom swing day analysis. Now for that, I've got to dissect that specific asset, work on it, and then project the swing days. And that's a different kind of work where I can just get the major swing days, so that person isn't really mucking around with the daily stuff, but is really going for the big stuff. And then when it matches their price, when it matches a certain swing, let's say pull back or a high or a low, whatever they're working with, then those days can be like really good major swings. But that's a different calculation, which is not part of the members information in the members area. But like I said, these can also be used if you're working off bigger time frames. All right, so I hope that helps, and have a good day.